Hello and welcome to My Finance Teacher. Today is 9th of January 2018 and gold is showing some indecision over the last several days, which is to be expected. Since 12th of December, gold has already rallied by nearly 7%, and of course it wants to cool down for a while. It's overbought on the 14-day RSI. It is stretched a little bit too far above its 20-day moving average, and it's been nearly a month since the beginning of this rally. Generally these rallies, the short-term rallies, the daily cycles, last anywhere between a month and 2 months. Lately they have been stretched to 1.5 to even 2.5 months. Some of the cycles like this, for example, or a cycle here. So what are we going to expect? Well, gold should consolidate for a while. It might pull back to a level of 1300. There is a support zone around that level. We've bounced around that level for several times. Plus it's a round number, and very often in our psychology these round numbers are treated as resistance or support zones. Additionally, by the time gold moves back down to that area, the 20-day moving average will catch up as well and add strength to this support zone. And actually that happened a few times in the previous intermediate cycles. As we see here, in the previous intermediate cycle in mid-2017, the first short-term cycle, the first daily cycle, has been going on for just about a month, and then it pulled back to this 20-day moving average. The same thing happened in early 2017 after rallying for just about a month, actually a month and a half or so. Gold pulled back down to 20-day moving average. And in the previous cycles as well, in the previous short-term cycles, at the beginning of a half-a-year cycle, at the beginning of an intermediate cycle, when generally the trend is still upwards, as we are in the advancing phase of this half-a-year cycle, the corrections that the daily cycles go through will not really be very deep, because as I said, the general trend for the intermediate cycle is to go up. So I expect a mild correction, probably down to 1300 over the next week or a couple of weeks. After that we're going to continue moving higher, and a similar expectation is on GDX, the gold miners. A very similar picture here. We've just touched the overbought level a few days ago, and again the 20-day moving average is probably going to meet with the price somewhere halfway at about 23 or so. A corresponding picture can be seen on the US dollar index. I think US dollar index is starting an intermediate cycle that will give us a lower low compared to the low the cycle started from at about 91, just above 91. And in that case, dollar is just experiencing counter trend rally that will not last very long, I think. And this short-term rally is going to correspond with short-term decline in gold. Another factor that I see contributing to these developments in gold is the S&P 500 that is performing quite well over the last couple of days. S&P 500 also follows these intermediate cycles that generally last for about half a year, although with the stock market these cycles can be stretched quite a lot. There is a cycle here, for example, from October of 2014. I don't really see the cycle finishing until all the way in September of 2015. That's nearly a year. Then we see a half-year cycle here, another intermediate half-year cycle here, and maybe these might be called two intermediate cycles. It's not that easy to say. In either case, whether these are intermediate cycles or we are in some form of extended formation, the current cycle, even if it started here in August, in the second half of August, has already been going on for half a year, and it's due for a correction, just based on the fact that many of these cycles last for about half a year, although they can be quite stretched. What else do we see on this chart that is interesting is over the last couple of years, stock market has been in this upward channel that looks something like this, and we are breaking out of this channel. Additionally, we are extremely overbought. My expectation is for the US stock market to continue up for just another little while to reach close to 2800. That is a large round number that might prove to be a significant resistance zone, and I expect a correction after that. A correction, if we'll throw in these Fibonacci retracement numbers, a correction that might take us to say at least 23% retracement, that is 2700 on the S&P. If we're going to experience a 38% correction, that's somewhere around 2650 on the S&P. So if that's going to happen, if US stock market is going to continue up for another several days, going up to 2800, gold is probably going to cool down during this period, with a lot of money moving into the stock market and not really wishing to flow into the safe havens. But as we enter this correction period, a lot of the money is going to leave the stock market, pushing gold, I think, considerably higher than this previous top, just above 1360. So that's my expectation out into March, and I think sometime in March or April we are going to reach a peak in this intermediate cycle, and actually we might reach that peak close to 1400. I wish you luck in your trades. Hit the like button on YouTube, hit the subscribe button if you are not subscribed, and check me out on Steemit, where I post regularly on gold, Bitcoin, and other investment topics.